The top business stories live from the Sky Newsroom. Apple results go sour as sales in China see an unexpected slump. Yes, it really is 5 years on from Brexit, but is the UK better or worse off? We'll be trying to find out. Plus, bracing for tariffs. Donald Trump to hit Canada and Mexico tomorrow. Will China follow suit? A very good morning and welcome to Business Live with me, Darren McCaffrey. Well, what a week it's been for US tech, a real roller coaster ride for the so-called Magnificent Seven. They are Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia and Tesla. Well, last night it was Apple's turn under the spotlight. It reported record results, beating Wall Street forecasts. But what will be a big concern is those slump in sales in China. Here are the numbers. Revenue was $124.3 billion for the first fiscal quarter of this year. Now, that is up 4% from the same period last year. But iPhone sales were down slightly at $69.1 billion. But sales in China dropped 11% to $18.5 billion. Well, delighted to say we can talk to Ross Mould. He's Investment Director at AJ Bell. Very good morning to you, Ross. Let's talk about Apple. I mean, the share price is up. It did in many ways beat analysts' expectations. But those sales in China have taken a real hammering.
Yeah, morning to you, Darren. I think there are two things there. One is competition from local brands like Huawei. And the second is the ongoing geopolitical tension between America and China, whereby Chinese customers are leaning towards domestic product, perhaps in gentle retaliation. You've also got to wonder whether Apple is necessarily as artificial intelligence savvy as some of its customers would like. It does have Apple Intelligence on the new iPhone 16, but only in the English language at the moment. So that could have been an issue as well.
Yeah, fascinating. You know, Apple's been such a success story over the last 20, 30 years. You seem to be suggesting that actually some people are thinking maybe it's a little behind the curve at the moment.
I mean, certainly in AI, there are suggestions that is the case, though intriguingly, this launch of the DeepSeek Chinese large language model that we've heard so much about this week could perversely actually play in Apple's favour, in that product is not relying heavily on vast amounts of serving and computer capacity, but you're in theory able to download it to a much simpler machine. So in a couple of years' time, you may be even able to do it on your smartphone, which means that Apple wouldn't be behind at all. It'd actually be in pole position because of its expertise in things like this.
Is it true, though, Ross, also that Apple haven't been able to find another great breakthrough device? I mean, they're still so reliant, aren't they, on obviously the iPhone, but other devices that were launched years ago.
Yeah, I mean, if you look at Mark Zuckerberg, the chief executive officer of Meta, he actually landed this punch just a couple of weeks ago saying, looking at Apple, he said it's still relying on a product that came out in 2007, which was the iPhone. So that you're not the only person thinking that. And you've got, all right, Mr. Zuckerberg perhaps has a vested interest in giving a rival in artificial intelligence a bit of a punch in the ribs. But it is a legitimate concern where Apple, though, is still clearly doing phenomenally well, even if hardware sales aren't going that quickly, is in services. The app ecosystem, payments, downloads is phenomenally powerful, makes customers very loyal, very sticky, and that business growth was double-digit percentage again, and it's very fat margin business as well, and that underpins the phenomenal cash flow that the company generates, which you can either give back to its shareholders or use to develop new products and services.
Ross, talk to me about this rollercoaster ride we've seen this week. You've talked about DeepSeek, haven't you? And you know what? It led to a meltdown on Monday. There's been some recovery, though, as the days have ticked by.
Yeah, I can't pretend to be a technologist as a history graduate, but looking at this, DeepSeek did challenge the sort of accepted narrative that you needed more data, more computing power, more energy to drive large language models and AI. And this system, on the face of it, seems to challenge that. They claim that they trained it up on just $6 million worth of spending, albeit that excludes prior experiments and research and development. It's open source. You can freely download it. It runs on simple machinery. So it challenges all of the existing narrative. And that's why you saw big stumbles in shares like Nvidia and Microsoft. Not because necessarily they're bad companies overnight, but it raises the question mark about their dominant positions and, more personally, the valuations that investors are paying, which assumes that they'll stay king of the hill forever, which, history suggests might not always be the case.
And there is politics at play here, clearly, too, isn't there, Ross, in the sense that, a big part of Donald Trump's plan for the United States is to ensure that they remain dominant in the AI world. And, the last couple of weeks have been a reminder that we may have underestimated China.
Yeah, I mean, the timing of the release of DeepSeek was very interesting because it came just a few days after President Trump announced the $500 billion Stargate initiative in the US to maintain its hegemony in AI and technology. And also during the Chinese New Year holiday, when actually getting hold of anybody in China to corroborate what they're saying has been pretty difficult. So there is a political element to this. Again, the Americans have been hoping that through sanctions on key technologies like silicon chips, they can restrain China's development and keep them at bay. But again, this development would suggest of DeepSeek would say that they've certainly found a way around those sanctions, if nothing else.
Russ, always a pleasure. Thank you very much indeed for your
Lovely
time
weekend.
on this Friday morning. That's Russ Mould there from AJ Bell. Now, it is 5 years, yes, 5 years, since the UK officially left the European Union. Remember that? Well, having famously voted, of course, by 52 to 48% in 2016, Brexit finally happened at 11 p.m. UK time on the 31st of January 2020. Brexiteers claimed it would bring freedom and prosperity to the UK, while Remainers argued the opposite. So 5 years on, are we any clearer on who was right? Well, according to a new YouGov poll, 55% of Britons now believe it was wrong for the UK to leave the EU, while 30% think it was the right decision. 62% of those questioned say Brexit has so far been a failure, against just 11% who feel it's been a success, with 20% unclear either way. Meanwhile, 64% would support Britain having a closer relationship with the EU without formally rejoining any part of it, while 55% would support a complete undoing of Brexit with a full rejoining of the European Union. So are we better off or not 5 years on? Joining me to discuss this are Vicky Price, Chief Economic Advisor at the Centre for Economics and Business Research, and Ben Habib, Chairman of the Great British Political Action Committee and a former Brexit Party MEP. Ben, let's start with you. The British public clearly don't think it's been a success.
Well, we voted to leave. We voted for the United Kingdom to leave the European Union. And actually, the United Kingdom didn't leave the European Union. We know, as I think every viewer will know as well, that we left Northern Ireland behind, that Northern Ireland is part of the single market for goods of the EU, subject to 300 areas of European Union law, including, as many viewers will know, also human rights law. So Northern Ireland sits quite separately from Great Britain. And Great Britain itself has signed into non-regression obligations with the EU on state aid, competition, employment, and environmental law. And these fetters, the Northern Ireland Protocol, which has caused Northern Ireland to be left behind, and the non-regression undertakings that we gave the European Union when we left the EU, have basically fettered the United Kingdom in its ability to actually do that which is right for the United Kingdom. And namely, what I have in mind is precisely what President Trump is now doing for the United States. We can't follow the American agenda, what they're doing, deregulating, cutting taxes, ditching net zero, putting up their borders properly. We can't do any of that because of the complications caused for our country through both the withdrawal agreement, which was the Boris Johnson deal to leave the EU, and then the trade and cooperation agreement, which he negotiated immediately thereafter.
Vicky?
Well, it's interesting that we focus on regulation. I mean, this is the time when the EU is deregulating. It believes that it needs to be competitive, and it's following what Trump is doing. And we've just had a big speech from Rachel Reeves about deregulating. But the truth is, from the economic side, We haven't really seen any benefits, and we've seen loads of worrying trends. I mean, one of them has been that the trade intensity of the UK has gone down in terms of exporting goods to Europe. That has suffered very significantly. Loads and loads of small firms have given up completely because of the difficulties that exist, even though there are no tariffs. And what the Prime Minister is going to try and do is see, if anything, that regulations can be closer to each other so that people can export and import, because at the end of the day, it's both industry that suffers, and so is, of course, the consumer.
Ben, I mean, the most fascinating thing from that survey for me is that essentially 2/3 of Britons now believe that we should have a closer relationship with Europe, not necessarily rejoining, but a closer relationship. Many would say, given the economics of where we're at, that would make sense if it helps to boost trade and make all of us a bit more prosperous.
Yeah, except if you look across the channel at how the various member states of the European Union are doing, they're in deep, deep trouble. Actually, the European model of economic management doesn't work. Look at Germany. It got rid of nuclear power because it turned its back on it after Fukushima. Then it decided to hitch its bandwagon to cheap Russian oil and gas. That didn't work. And now, in the pursuit of net zero, it's ditching its most powerful, economic driver, which is the internal combustion engine-driven car.
I'm not entirely sure what that's got to do. I can turn around and say...
Can I just finish?
Well, Ben, I'm just going to say, you brought up Germany. I'm going to bring up Greece,
No, you're not letting me
Spain,
finish.
Ireland. They're all doing very well inside the EU.
Germany has been in recession for 2 years. That is the result of economic mismanagement. And that is the direction in which the EU is going. We need the opposite of what the EU is doing in terms of its economic management. We need deregulation. And right at the top of the list has to be ditching this economically emasculating drive to net zero, which we cannot do as long as we have Boris Johnson's deals in place. We have to ditch those deals, and we've actually got to leave the EU before you can judge whether Brexit has been a success or not.
OK, that's fair enough. I'm just merely saying that Germany's economic mismanagement, I'm not entirely sure is related to Brussels, in the sense that there are other countries inside the EU who are doing very well at the moment.
Germany's the only really significant economy that matters.
Vicky, Ben's got a point, though, in the sense that the EU is regulating when it comes to AI, clearly the technology of the future. Can we not use our freedoms, if you like, to exploit the fact that we can do a lot more with artificial intelligence than EU countries can do because of the regulations imposed by Brussels?
Yes, I think we're trying to do a bit of that, but Brussels is also deregulating in the same area because they realize they have to be competitive as well. So us by ourselves, a relatively small country, if you compare us with the US, with the whole of the EU, and of course with China, there's a limit to what we can achieve by ourselves. So, and if you look at, it's interesting that we've just been discussing Germany, it just shows that individual countries can follow within the EU their own policies. They could be wrong, very wrong policies, but they can. Nobody stopped Germany from doing what it wanted to do on the nuclear and other areas.
It's required to follow net zero. Germany's required to follow net zero through the EU.
We have a climate change budget, which we've had all the time that we have been in the EU, and we've been following our own pursuit on renewables without the EU necessarily dictating anything to us at all.
We have absolutely wrong, Vicky. We have a non-regression obligation under the TCA, which means we can't deviate from the drive to net zero by 2050. We may be able to edge intermediate posts here and there, but actually the overall drive towards destroying our economy on the altar of this net zero madness remains. It's part of the TCA. We've got to do what President Trump is doing, which is champion fossil fuel industries within the United Kingdom, stack Ed Miliband, and do something positive for our economy.
Okay, that's all politics, and I'm not going to comment on that. But the reality is that the EU has already been looking at how they can become more competitive. The UK being part of a wider group which can put all its muscle together. I mean, we can't suddenly find 500 billion to invest in AI the way the US has done. Part of the EU certainly working closer together and pulling resources together, as we're doing, hopefully in defence and other areas, is certainly the best way to go forward.
Vicky, the EU remains the largest trading area in the world. We know that. But let's be honest about that. It's not the most dynamic place, frankly, is it? Don't you think it would be better for Britain in the next 5 years to try and work out a better deal with the United States and with Donald Trump than trying to sort out what is still a pretty toxic subject of Brexit and the EU relationship?
If you look at the US, it's true that it's the largest trading partner if you look at individual countries, but the EU still remains our main area of both exports and imports. And of course, we have been expanding what we're doing with other countries as well. But look at China. We just had results, for example, from Apple. This today is showing clearly that China is not buying anything very much any longer or decline from Apple and other areas. It's developing its own economy. The US is looking very inward with a lot of protectionism, wanting to impose tariffs. So it's not a very good time to be isolated and trying to have deals with big areas of the world that really don't see us as being particularly important.
And Ben, isn't that fundamentally the question, is that we've got a pretty stagnant economy. We need to find growth from somewhere. Why not, forget about the politics, why not just try and get a better deal, a better trading deal with the largest economic bloc in the world that's, a couple of miles across the channel from us?
The largest economic bloc in the world is doing really badly. It's becoming less and less significant as time passes. The real driver here, Vicky says the US is looking inward. The US is going to be a resurgent economic superpower any second now because they're going to deregulate, cut taxes, and drill, baby, drill. And it is Europe and the United Kingdom that will suffer if we don't get on that bandwagon. Capital across the world is fluid. It'll go to where it can get the biggest growth and has the lowest friction and the lowest costs associated with getting that growth. That will be the United States of America. Our brightest will also leave this country in order to pursue careers in America, which will be on its front foot, while we stay in this morass of over-regulated, EU-led, ridiculous levels of regulation effectively. And the net zero thing, I'm sorry to come back to it, but the net zero thing is a significant contributor to the damage that's being done both to the European economies and to the UK, because we're absolutely locked into it. And the Tories did take some of the pressure off, but Ed Miliband's put it right back on again.
And just very briefly, Vicky, in essence of balance, just your response to that.
Well, here we are talking about airport expansion, not just at Heathrow, but also across the UK.
It's never going to happen.
That may be the case, but it doesn't suggest that we're bound by constraints which won't allow that to happen if we could.
It's performative politics by Rachel Reeves. She wants to give the electorate a bone of growth, which she knows she can't deliver. She knows she can't deliver that runway. That debate's going to rumble and rumble and rumble. It's great performative politics. It's not real economic management.
OK, guys. God, how we've missed this. It's like a moment of nostalgia. Ben and Vicky, thank you very much indeed. 5 years on there. Is the UK better off? The question mark remains. Right, let's bring you up to date with some of the rest of the business stories on this Friday morning. And Canada and Mexico are due to be hit by new 25% US tariffs from tomorrow. President Trump said he is targeting undocumented migrants and the drugs that come across US borders. China is expected to be next on the list. House price growth has slowed, according to the Nationwide Building Society. It fell to 4.1% in January, down from 4.7% the previous month. That puts the cost of a typical UK home at just over £268,000. And Comcast, the parent company of Sky, has reported the best financial performance in its 60-year history, partly thanks to the success of the film Wicked. The company reported that revenues in its studios division rose by 7% to $3.27 billion in the final quarter of 2024. But shares were down more than 12% due to a steep decline in broadband subscribers. OK, you're watching Business Live here on Sky News. Coming up in just a couple of minutes, looking at the markets on this Friday. It's been a bit of a rollercoaster ride in the US, quite stable here. We'll have all the details after this quick commercial break.
I'm Deborah Haynes, Sky Security and Defence Editor.
The reality of life under Russian fire.
People don't want to leave, even though help is here to evacuate them. They say they want to sort out their belongings first. It's absolute chaos.
Fire, shouts the commander. there's a dash to safety, as Russian drones will be trying to find this position.
We've now got to wait inside the shelter to see if there is incoming. I've been covering Russia's full-scale war since it began, witnessing the terror and the trauma.
When rockets fall, I try to hide my head under my toys.
Illustrating Ukraine's lost childhood, hopes and dreams framed by war.
Conflict in the Middle East is another major focus.
An incredibly dangerous moment.
We saw the missiles streaking across the sky. We saw the intercept going up, and then we saw the explosions when the intercepts were successful. With global threats rising, I also explored defence and security in the UK and across NATO.
This US aircraft carrier is operating in European waters in a deliberate show of force.
This is routine training for NATO, but should Russia's war with Ukraine escalate significantly, pilots like these could be called upon to go into combat for real.
Tucked away in the National Archives are some of the UK's old defence plans.
The scale of this bunker underlines how seriously governments took the threat of nuclear attack and global conflict. Should allies listen to Vladimir Putin's sabre-rattling?
No, they shouldn't, and they don't.
Sky News, the full story first.
Mandatory evacuation, you must leave!
For many people, Harvey is far from over.
People here believe the water will be this deep for weeks.
I'm Greg Milam, and I'm Sky's Chief North of England correspondent.
Are you trying to run me over, Sir Philip?
No, go away.
Look like it, sir. Will you respond to those who made accusations, Sir Philip?
Can you go away?
Sky News, the full story first.
Welcome back. Let's have a look at the markets on this Friday morning. And Europe is on course to outperform its global rivals, including Wall Street, for the entirety of January. This is how the indices are looking this morning, and they're all up across the board. The European Central Bank cut interest rates yesterday, with the markets betting on the Bank of England doing the same next week. And the FTSE, as we saw just before the break, is up a fraction as well, up 0.34%. The pound, meanwhile, is down against the dollar and the euro this morning. I haven't got that for you, but you can take my word for it. Daniela Haythorne is Senior Market Analyst at Capital.com. Good morning to you, Daniela. Let's talk tariffs if we can, because we're expecting, aren't we, these tariffs to come into play tomorrow for Canada and Mexico.
Yeah, it's not certain yet. We could still see a little bit of backtracking on the extent of these tariffs. But as you were saying earlier, the whole goal of this tariff is to attack the illegal immigration and drug smuggling that's coming across the border from both Canada and Mexico. That's the key emphasis that Donald Trump has made on this play. Now, it's far from obvious that tariffs will actually help counter these problems. So there is a lot of uncertainty in markets as to what exactly is going to happen here. Are we going to see any actual benefit to the US economy? Now, Trump has said that the US doesn't need Canada and Mexico. These are, of course, two of the closest allies of the US, especially in the oil market. Now, a lot of the uncertainty is whether these tariffs are going to apply to Canadian and Mexican crude. Again, these are the biggest exporters of crude to the US. Now, he said that the US has its own oil industry. It can survive on that. But of course, this will have a knock-on effect on prices. So traders are trading with caution this morning. As I said, it's not 100% certain that we will see tariffs tomorrow and Saturday, or the extent of these tariffs, or what areas will they cover. But there is uncertainty as to how this will affect inflation later on in the year. Also, with oil prices, Trump has made a pledge to bring down inflation and therefore rates by keeping energy prices low. What effect could these tariffs have on the energy industry, especially if we do see those tariffs applied to the oil industry as well?
And Daniel, there's been a lot of focus, hadn't there, when Donald Trump got elected, about a rally on Wall Street and how well the US was doing. And actually, this year so far, it's Europe and Europe's stocks that are doing particularly well.
Yeah, it's stocks like the Stock 600, one of the market indexes in Europe, as well as the DAX 40, for example, have been outperforming the US for a while now. And as you were saying, overall in the month of January, expected to have outperformed the US. Now, in recent weeks, there has been this question about US exceptionalism. And you have to think the rally that we've seen in the stock market for the last 3 years has been driven primarily by that US exceptionalism. And a lot of that focus has been in the US tech sector. Now, we know this week we've had that market meltdown on the back of DeepSeek, which has kind of recovered now. And I know you've covered it already, but it does question the valuation of some of these companies. They are very, very expensive, especially the key drivers of that rally, which has been the big tech sectors. So when you're comparing these companies to European companies, they are really, really cheap when it comes to valuation. So essentially, if you're looking at price to earnings ratio, Europe has a lot more potential than the US, which seems very overinvested right now. So it seems like we're just seeing this rotation, especially based on valuations, but also these stories affecting US competitiveness have also helped the momentum drive towards the other side of the Atlantic this week.
And just very finally, and briefly if you can, Danielle, I don't know if you saw my discussion earlier about Brexit. It was like a trip down memory lane. There has been a lot of talk about the impact on the City of London. We're 5 years on now. How's that looking?
Yeah, as you say, there's a lot of question as to whether it's helped the UK economy at all. Now, I heard mentions earlier about the Eurozone's not in the best place, and that is true. Germany is struggling. A lot of the economies are struggling. GDP, we saw yesterday, is coming down, but the ECB seems to be managing that quite well. And I think markets are pretty pleased with how the ECB is lowering rates and creating a more neutral rate. We don't have that in the UK yet. The Bank of England is struggling to balance still inflation that is too high, and of course, a struggling economy as well. Now, to what extent that is due to Brexit or not, there's been so many factors that have intertwined in the last few years. Of course, COVID, disruption in supply chains, Brexit as well. But there's definitely some sort of discontent in markets as to maybe it's had a negative effect overall.
OK, Daniela, always a pleasure. Thank you very much indeed for joining us. Daniela Haythorne there. OK, that is it for me on Business Live for this morning. We're back, of course, at 4:30 this afternoon. Do join me then if you can. Up next, it is the very latest news with Gareth Barlow, including the latest on that plane crash in the US. Stay tuned. I'll see you later.